The massive Tesla gamble of 2026 just changed everything. There is a moment in every company's history where the decisions made don't just affect a quarter's earnings or a product launch cycle. They reshape the entire trajectory of the business for the next decade. Tesla is living inside one of those moments right now, and most people watching from the outside have no idea how deep the stakes actually go. For years, Tesla operated in a world where it had no real competition. It was the only serious electric vehicle company that had figured out how to make EVs desirable, affordable, and profitable at scale. That era is gone. The competitive landscape in 2026 looks nothing like 2020, nothing like 2022, and even nothing like 2024. Chinese automakers like BYD have not just caught up. In certain global markets, they've lapped Tesla entirely. Legacy automakers who stumbled initially are now producing EVs with serious range, serious quality, and serious brand loyalty behind them. The question Tesla faces is not whether the competition has arrived. It has. The question is what Tesla does about it. What Tesla has decided to do is make the biggest bet in its corporate history. And when you lay out all the pieces of it together, it becomes clear that this is not a company playing it safe. This is a company that has decided the only way to win the next decade is to abandon the playbook that made it successful in the first decade. The centerpiece of that gamble is autonomy. Full self-driving, robotaxis, the cybercab, whatever name you want to put on it, Tesla has decided that the future of its business is not selling cars. The future of its business is selling miles. The idea is that a Tesla vehicle becomes something like a money-generating asset rather than a depreciating product. You buy a cybercab or a Model Y with full autonomy enabled, and when you're not using it, it's out on the road earning you money. Tesla takes a cut of every mile driven on its network. The hardware on the road multiplies. The network effect grows. The revenue compounds. At least that's the theory. To make that theory real, Tesla needed to prove its autonomous technology actually works in a commercial environment without safety drivers present. And in 2025 and into 2026, they started doing exactly that. The Austin Robotaxi launch was the first real public test of whether this vision could survive contact with reality. And the results have been complicated, not a disaster, but not a triumphant proof of concept either. There were incidents. There were moments of uncertainty. There were questions raised by regulators, by journalists, and by the public about whether the system was actually ready. Tesla pushed forward anyway. That decision to push forward, to keep deploying, keep collecting data, keep refining, is itself a form of the gamble. Because if something goes wrong at scale, the reputational and regulatory consequences could set back not just Tesla, but the entire autonomous vehicle industry. But here is what most of the criticism misses. Tesla's approach to autonomy is fundamentally different from every other company pursuing the same goal, and that difference is why the risk is simultaneously much higher and potentially much more rewarding. Waymo, Zoox, Cruise, these companies built their systems around high-definition maps, LiDAR sensors, and highly controlled geofenced environments. They know exactly where every road is, every curb, every traffic signal before the car ever drives there. It is a reliable approach. It is also an approach that scales very slowly and costs an almost incomprehensible amount of money per mile of operation. Tesla built its system around cameras and neural networks trained on billions of miles of real-world driving data collected from its existing fleet. No LiDAR. No HD maps. The car has to figure out the world the same way a human does, by looking at it and reasoning about it in real time. If that approach works, Tesla can deploy autonomy anywhere on Earth that its cameras can see. If it doesn't work reliably enough, then Tesla has a fleet of vehicles on public roads making decisions they're not fully equipped to make. The financial dimension of this gamble is just as dramatic as the technical one. Tesla has been investing in AI infrastructure at a scale that would have seemed absurd to describe even 2 years ago. The Dojo supercomputer project, the massive GPU clusters, The humanoid robot program with Optimus. These are not cheap side projects. They are core capital expenditures that are consuming billions of dollars. Tesla's margins, which were once the envy of the automotive industry, have compressed significantly. Price cuts designed to maintain volume have eaten into profitability, and now the company is spending aggressively on infrastructure whose payoff is not guaranteed and whose timeline is uncertain. Elon Musk has said that he believes Tesla's value is almost entirely tied to the success of autonomy and the Optimus robot program. That is an extraordinary thing for a CEO to say. It means that by his own accounting, the car business, the thing that built Tesla, is essentially a platform for something else. If that something else works, Tesla could become one of the most valuable companies in human history. If it doesn't, the car business alone, squeezed by Chinese competition and eroding margins, is not enough to justify the current valuation. Then there is the Optimus dimension, which doesn't get nearly enough attention relative to how significant it could be. Tesla is building humanoid robots, not as a novelty, not as a demonstration, as a product. Musk has talked about eventually producing millions of Optimus units per year, deploying them first inside Tesla's own factories, and then selling them to businesses and eventually consumers. The vision is a robot that can do physical labor in warehouses, in manufacturing, in households, at a cost that makes it economically viable to replace or augment human workers at massive scale. The implications of that, if it works, go so far beyond Tesla's automotive business that it almost requires a completely different mental framework to evaluate. You're not talking about a car company anymore. You're talking about a company that could be providing the physical labor infrastructure for the global economy. The market knows all of this, and the market is deeply divided about what to do with it. Tesla's stock has been one of the most volatile large-cap assets in the world because investors cannot agree on which version of Tesla they're actually buying. Are they buying a premium EV manufacturer with strong brand recognition but increasing competitive pressure and shrinking margins? Are they buying an AI and robotics company that happens to make cars as a means to an end? Are they buying a robotaxi network that doesn't fully exist yet but might dominate urban transportation within 10 years? The answer to which of those questions you believe determines whether Tesla is wildly undervalued or dangerously overvalued at any given price. What has changed in 2026 is that the theoretical phase is ending. Tesla can no longer describe what it's going to do. It is being asked to show what it can do. The robotaxis are on the road. The Optimus robots are working inside factories. The autonomous miles are being accumulated. The data is being collected. The results are being watched by regulators, by competitors, by investors, by governments, and by the billions of people whose lives could eventually be touched by whether or not any of this works. There is something almost cinematic about the position Tesla finds itself in. It spent years building credibility by doing things that seemed impossible. Electric cars that people actually wanted, a charging network that actually worked, over-the-air updates that made vehicles better after purchase, direct sales that cut out dealerships. It accumulated a track record of making bold bets that paid off, and now it is making the boldest bet of all, the one that says everything that came before was preparation for this moment. The car was just the beginning. The battery was just the beginning. The software was just the beginning. What comes next is the thing all of it was building toward, whether that is visionary clarity or the rationalizing logic of a company that has talked itself into believing its own mythology. That is the question 2026 is now forcing Tesla to answer. Not in investor presentations, not in keynote speeches. In the real world, on real roads, with real consequences. The gamble has been placed. The table cannot be reset. And everyone watching is about to find out what Tesla is actually made of.